The looming rate hike is weighing on gold, just like it did last year when the Fed hiked rates for the first time in 9 years. And according to our next guest, we could be experiencing a deja vu. Could prices be setting itself up for another big rally in gold? Here, joining us from Chicago is Todd Bubba Horwitz of BubbaTrading.com, or as he puts it, the only guy in there who always has skin in the game. Bubba, good to see you again.
Always great to be with you, Daniela.
So, Bubba, you are seeing similar conditions as last year, calling for an instant replay of gold's 2016 rally after the Fed hikes in December. So, are you convinced the Fed is ready to tighten here?
Well, I'm not so convinced about the Fed, but I think they're going to be forced into it. And I'm going to get out my red challenge flag and throw it on the field because there's going to be an instant replay. We've got a lot of things going on. And if you've been watching, the bond markets have been pushing interest rates up anyways. The Fed is so worried about their credibility, which they have none, but they're worried about it. And they're going to be forced to raise because every goal that they set, they've met and exceeded, yet they still have a problem trying to raise rates. So they're going to pull another end of the year surprise and raise rates. I mean, the Fed funds are already pricing in a 70% chance, which I don't put a lot of stock in the Fed funds because they've been wrong so often lately. But right now, more want to raise than don't. And they're going to have to raise, or the banks and the insurance companies are going to have a lot of trouble.
So it's been the third negative week here for gold, but the metal has managed to defend that key 1250 level today, Bubba. What levels are important to watch here for gold?
Well, I think here is good. And this is where you have to decide if you're a trader or you're an investor. If you're an investor, I would certainly buy a portion of what I was going to buy right now because I believe in, building in. I think there's a chance we can go to 12. I think there's an outside chance we go lower. Now, I'm looking to buy, and I'm a buyer. But there's always that last chance as you finish a cycle. Now, gold has been basically in a bear market, although we've had a nice rally at certain times this year, but since 2011, after we peaked out. And you could have one last push down, which I think would be probably the buying opportunity of a lifetime. This last push, if we get it, will be an unbelievable buying opportunity because there are so many factors that favor stronger gold going forward that I would love to really see what we call a blow off to the downside and really start to buy down there. But in the meantime, 1200, 1250 are real good levels to get in as well.
That's a big statement, Bubba. Buying opportunity of a lifetime. Now, let's play out the scenario just for fun that the Fed does, do a rate hike in December. What happens then? You say there could be other positive factors for gold. What factors do you think would push gold prices higher?
Well, I mean, if the Fed raises, but they've done a lot of things that are kind of sneaky, right? You had Janet Yellen come out about 2 weeks ago and say, hey, we might go into the atomic buying program of buying ETFs and buying assets. Well, that's one sign saying, hey, we're really out of bullets here. We don't know what to do, so we can take money and buy. There's also a chance, nobody believes it, but there's a chance that we can go negative rates because when you've got a debt to GDP ratio right now, which is 50% based on these extremely low interest rates, when rates go higher, that debt to GDP goes higher, and that will not be good for the economy. That will put us into a tailspin, which means they might have to reverse and go back to some sort of negative thing. I'm convinced that there's another QE coming before this all busts, unless they finally decide just to let the markets go. But for some reason, they believe that they have to come in day by day and manipulate the markets by one Fed official speaking, talking dovish, one talking hawkish, and they always leave the dove for the last one just in case the markets get to hit too hard.
All right. I love your ideas and theories, Bubba. Thanks so much for joining us today.
Thank you, Daniela.
And thank you for watching. We'll see you next week.